AMD's up a ton today. NVIDIA's up a ton today. The Saudis are going to buy AI chips from these companies. You have headlines reported right now that Qatar Airlines just ordered over 160 Boeing jets worth more than $200 billion. Okay, Boeing's now over $200 a share. If you realize, in January, I said Boeing's going to be the best performing Dow stock of the year. Right now, it's up 17% year to date. Dow Jones is down 1% as of now. So I think the stock's just on its way. It's going to go a lot higher to over 250 before year end. Again, we're going to take some victory laps here. Why? Because we did eat some crow, not believing that Trump would push through with a lot of tariffs, and we've seen a lot of our portfolios and stocks, like a lot of people out there, go down. But instead of sitting on our hands, we recommended a lot of stocks here. We did a great job averaging down in some of those names, even some of the crypto names, and holy shit, what a difference a month makes, right? So really good stuff. We stayed the course and said, hey, we made a mistake. We didn't think that Trump would follow through, but a lot of these deals will eventually get signed. There's so many catalysts coming up on the markets, and now you're seeing the S&P actually up on the year. Holy shit. Pretty good week for Trump, and especially the Saudis, which they're still coming out with more and more announcements. Another announcement, they're going to invest in billions of dollars in 34 companies. I saw Exxon and Honeywell, two of the ones that were mentioned. That news just broke. You're going to be able to see a lot of those companies, but this is one country, right, that's working with the U.S. So what happens, with China? What happens with Europe could be next? What happens with Canada? You're seeing these markets where the deals are going through doing very, very well, right? So it's just going to open the door to more trade deals, and we're going to see what's happening. But so far, so good. And Trump, after 100 days, you could argue not too great. The last week, I don't know if you could... you could argue you haven't seen a better result from any president in the past week, whether you like the guy or not. Just the shit that's happening right now. Even CNN, even the most leftist shows are like, hey, a lot of good positive things are happening. And that's what we want to see as Americans. That's what we want to see for the stock market. It's definitely being reflected in the stock market right now.
What a difference a deal and a few things make. It's been tossed and turned around. Yeah, we got closed out. We took some pain, no doubt. But this is a bigger picture of, depending on your time frame, why it is very difficult to time the market in general, being all in or all out. There's some great macro calls. Just shows you how odd all this stuff is when putting it all together. Very murky and muddy, but is the world we live in. The Saudi deals are great for headlines. Over the weekend, the U.S. China deal are great for headlines. It doesn't mean we're all, it's clear sailing here. And it was hilarious because I appreciate all the feedback. Daniel at CurzioResearch.com. We had a sub for Dollar Stock Club, which... good for you on the Boeing trade. Emailed me last week and said, President tells you to buy stocks again and you guys don't come out with a pick.
That was one of the news. We actually recommended it for the first time.
Kudos to him, because that was awesome.
He had 3 picks we had in our small cap newsletter at the same time, the same month. Usually we have 1 pick a month. So we recommended some stocks. Depends what newsletter it's in. I'm
not trying to rain on this parade because, just last week or the week before, I talked, the follow through on Palantir after earnings and even Uber had such high runs up. I didn't think it was a risk-on market. We are clearly getting back to the risk-on market, but just as a little bit of caution, and I want everybody to keep this in perspective or their thoughts when thinking, Frank, I'm happy. I want deals with everybody. The tariff deals, if you had to guess, what do you think the average tariff is? And this is according to the Yale Budget Lab. And I'm only bragging or using these guys because they were all over on CNBC. So whoever the flying Florida Yale Budget Lab is, evidently they're credible, Frank.
Yep.
What do you think the tariff rate from the U.S. on basically everybody else is right now, if you had to guess?
Right now, I would say, 10, 15%?
Very close. It's about 17-ish, they call it. And there's different, don't hold our feet to the fire on this. You can Google this or whatever. But the point is that let's just round down to say 15%. Frank, that's multi-decades. That's 30, 40, 50-year highs. Now, I'm not saying, hey, that's, this is BS or we're being misled. I'm simply telling you that from here forward, all this is great news, but do not expect just clear, smooth sailing. There's a big difference, Frank, when you have tariffs with your trading partners at 50-year highs with the economy going forward. Not a reason to sell. Just be cautious and don't think that the volatility is over or we're still in this clear as mud, I guess I want to say.
Yeah. And look, we have a lot of people that are coming on board. Thank you so much for listening. We're growing traffic fast at our fastest rate as a company right now in the past probably 6 months and even the past few months, especially on our social media platforms. So we're getting lots of traffic, which is great. I love getting new investors. And those new investors are funny because they're speculative, right? And they look at a podcast or listen to you and saying, oh, yeah, really, this is full. And you should be that way. And then, I respond to them and saying, this is a free podcast. Listen for a little while. All right. If we're full of shit, don't listen. It's free, right? We're not selling you anything, at least not yet. If you want to buy our newsletters and stuff like that, there's a lot that goes into our research. And also we have a lot of people who are going to hate Trump no matter what. That's fine if you're a Trump hater. It doesn't matter, because I get some emails and people say, oh, Trump caved and concessions are not that big and this is not a really big trade deal. It's only 90 days where China can renege on the deals. So But if you hate the guy, you want to protest him, hold up a sign. What we're doing here, when we look at the stock markets and what's happening, this is fantastic news for the markets. And there's a few reasons why. If you want to argue that Trump caved and they negotiated better, okay, if that's what you believe. I just interviewed a great guy. His name is Scott Tinker, Dr. Scott Tinker, on Energy. He's coming out Friday, one of the best interviews that I've had. I'm not even kidding you. Just a guy that educates people on energy, goes around the world. He's done thousands of keynote presentations. He just talks about every facet of energy. One of the things that he said is China was more reliant when it came to the trade deal. Like, we needed China more than China needed us, which is different from what I believe. And that's great. And that's what you want. So we have this podcast. This way you have an opinion, open up to it, right? It doesn't matter who caved or, who got the benefit of the deal. What I know is both of these markets are going up tremendously. And by signing this deal, it removed recession risk 100% out of the market. And if you don't believe so, you can look at the data, because you look at last GDP in negative. Everyone's like, okay, we're probably in a recession, right? Makes sense. But Atlanta Fed, who everyone really follows, who's great in their predictions, they revised next quarter's GDP to 2.3%. Okay, so we're taking recession risk off the table. We're negotiating a deal with China. You look at stagflation. Stagflation is higher inflation with slower growth. I just talked about the growth component, which is we're growing. But now we're looking at inflation. Inflation came in at 2.3%, lowest since 2021. You take stagflation out of the equation now. Now you're looking at tariffs where we're supposed to see this number go up dramatically, and it hasn't. And maybe, listen, we still got months, and it's it's lagging data, and I get it. But a lot of people predicted that this would be a lot higher inflation. It didn't happen. Now you have tax cuts coming. Now you have deregulation, which is huge, which is coming among the banks, right? More positive tariffs news from countries coming. So, and most important, what I think is getting lost in this is we're looking at the economy growing, a lot of this risk off the table without the Fed doing anything right now. In terms of interest rates, we're like, lower rates. And Trump's like, you're a bum, lower rates, right? He's going after Powell. The fact that you have all that ammo to lower rates if the shit hits the fan further on later this year in 2026, we're doing this at a time where unemployment is very strong. Now inflation numbers are coming down, and now we're seeing stronger economic growth than we initially anticipated. What does that mean? It's all massive positives for the stock market, which is why you're seeing everyone and their mother upgrade their estimates all of a sudden, which is, Goldman Sachs, JP Morgan, Mike Wilson, biggest bear. Now he's bullish. Ed Yardeni, all these guys. Every bear in CNBC is now reversing course and raising their estimates on the S&P 500 considerably, including Goldman Sachs. Goldman Sachs called for a 20% decline in the S&P 500. So we could see a 20% decline 5 days ago. Now they said, no, not anymore. We see the S&P climbing 11%. Okay, they revised that yesterday. So we have these huge tailwinds, which we talked about. Now we're solving trade deals. And what you need to know is Daniel talked about the risks. And you're right. Like maybe China's like, F you, we're not going to do this. But you can't see China doing that. Because right now, China is going to everyone, their social media platforms saying, look what we did with the U.S. We pushed them around. We got the deal we wanted. And look at what's happening to their economy. Because if you look at the China market, the hedge funds and people were buying because we're getting this bazooka stimulus, right? If you think China got the best end of the deal or China was great, China stopped reporting the statistics. I don't know if you know that. They stopped reporting key statistics. Why do you think they did that? Okay, you're looking at China just announced another bazooka stimulus plan. Why? Because you're looking at two factors that were the thesis to buy China. Growth, right? Huge GDP growth. And then also you're going to see that revenue growth, right? Come in because we're going to see sales explode for them. And you took that off the table when the U.S. was arguing about tariffs, because now you're taking the biggest market out. Now you remove the revenue component. Okay, GDP is going to go higher and all this, and you're seeing that currency collapse. But now you take a lot of this off the table. So for China to come out and say, no, we're not happy, you're going to see another collapse. This is a country that's on the brink of depression. If you look at statistics that we followed for a very long time, we had great contacts and stuff like that helping us with that, which I have to give credit to. And who specifically asked me not to use their name, or I use them. But when I look at China and what's happening to their economy, when I look at the Saudis, look what happened when a deal was announced. Look what's going to happen to other Middle East countries that are announcing deals like Qatar. Now you're seeing Europe. Now you're seeing Canada. Now these deals are going to come on the table where more money is coming into the U.S., right? You're seeing our economy looking a lot stronger. From a stock perspective, it doesn't get better than this. Are there risks? Yes, but the risks are going to hurt if China backtracks. It's going to hurt them more than us. Right? So I don't see that happening. And now it opens the door to more trade deals. And look, from a stock perspective, it's exactly what you want. It's exactly what we were predicting. We just didn't see Trump going nuts and trying to negotiate tariffs with every country at the same time, which hurts stocks. But it's good that we doubled down a lot of names, doing very well in the portfolios. And that's why we do this. That's the biggest thing why I do this podcast is I want to see people make money. I want to teach them how to make money. I want them to learn from my mistakes. That is the greatest. If you want to know why I love doing what I'm doing, it's times like this when people are doing very well, saying, hey, you got to buy Palantir, even though the stock freaking crashed on their earnings, it didn't deserve it. And now it's up, 25% from that. We're telling you to buy NVIDIA is over 130 now. It was below 100 a month ago. AMD is even up, which is surprising. But again, they're signing deals with Saudis. All this stuff is really great news for the stock market. And it puts a lot of trends that people worry about back into play, especially some of the cyclical industries that got nailed. And you're going to see a lot of these stocks start rebounding. And you're starting to see that already over the past, couple of weeks. And it's really good because we're well positioned in our portfolios, which is great news for everyone who's following us right now.
To your point on AI and NVIDIA and those kind of stocks rebounding, Frank, my big takeaway with, or some of the Saudi Arabia, I don't know if you caught, but CNBC was one of the big sponsors. There's the Saudi U.S. Investment Forum 2025. And I thought there was some cool stuff there. The biggest takeaway, in my opinion, is this really kind of supercharged or helped put fears at ease with the data center and this whole AI growth story. What I think this is doing, and this is Daniel Creech's opinion, Frank, chime in here. We had the DeepSeek and we had a lot of fears over AI and spending and all that kind of stuff. And listen, when those fears are resurfaced, repeated on financial media constantly 24/7, they can have an impact on you. And I'm not blaming them for the sense. I'm just simply pointing out the reality of the facts. And we know that fear sells. So after the initial scare, we've gone through earnings season. We've seen the hyperscalers continue to pour money into investments in R&D and data center build-outs. And still, we have this skepticism. Now, Frank, we go over to Saudi Arabia. All these deals are being announced. The data center deals, you mentioned NVIDIA. What's the SMCI? I don't know the company. I know the ticker.
Supermicro.
Yeah, that one. They're up. I don't know what they're up today. If you can check, 10, 15%. They announced a $20 billion data center deal with the Saudis. Palantir was over there, Frank. And my point is that if you think it's slowing, then continue to do your research. It's okay to be skeptical. But right now, not only do you have, you just have a reiteration, in my opinion, of a global dominant story in all things AI, all things power generation and computing. And it was pretty impressive. And listen, I'm not trying to take the sides of Saudi Arabia over the U.S. Of course, I'm pro-U.S. always. It was wild, though, to hear. And I understand, Frank, that you want to be respectful everywhere you go, your house, your rules type deal. But listening to the CEOs on different panels from BlackRock and Larry Fink and Palantir and Alex Karp, these guys have been going to Saudi Arabia for 20 to 30 years in some cases. And just talking to them about the changes and stuff that they're seeing and all this money and how Saudi is divesting from oil. One last thing here on oil. There's no coincidences in politics. That's my opinion. And if you were scratching your head somewhat like I was over the last couple months when OPEC continues to increase production, even though oil has absolutely fallen out of the sky and their biggest revenue is oil. Now you see all these deals come into place. I don't think it's a big deal to understand that there's always backroom deals going on between everybody and every government, as there should be. But if you don't think that they were increasing oil production ahead of this and now announcing these deals, I just agree to disagree. But this is deal making, and this is positive for markets, Frank. Absolutely.
Yeah, and you're seeing it. Look, we talked about NVIDIA, and AMD. So Saudi, they're open up where Saudis could buy, chips from them. Supermicro up nearly 20% today. It's up 50% for the week. This was from an upgrade. Great timing. I think it was Raymond James who upgraded that stock a couple days ago. But now they just inked a deal with the Saudis, like you said, $20 billion to supply GPU platforms to AI campuses across Saudi Arabia. All right, so this deal comes along with what? They got this deal. Why? Because they promised to expand manufacturing in the U.S., right? So you're seeing everyone work together. And regardless of what you think of the political side, a lot of deals are coming together, which you're looking at AI. The spending has never slowed. The CapEx has never slowed, and it's not going to slow. Because if you're looking at the different models, just look at when you see the large language models and how they have like the scoreboard and stuff like that, which is independent developers seeing which is the best one. I think it's Gemini right now. Llama was up there a couple weeks ago. Then you had Anthropic up there. This is just for the large language models, right? We're not talking about the agentic part of it, which is, creating these bots and almost like employees, which are going to be in the tens of millions pretty soon. We're not talking about the predictability part of this, inference, which is going to use a lot more power. But these guys have to continue to spend, because if they don't, the biggest technology companies, if they fall behind, they're going to lose a third of their market cap, which is $1 trillion for some of these guys now. Apple's back over $3 trillion. You have NVIDIA back over $3 trillion. Microsoft over $3 trillion, right? So $3 trillion is just unbelievable. Someone's been following this market for 30 years. Holy shit. These guys have to continue to spend. They never stop spending. However, the stocks got hit as if, oh, wow, they're canceling some of their leases. In Microsoft's case, it's a lease, all right? There's still ownership of this stuff. They're still signing deals. So now what this does is accelerates this. And now you're seeing this huge push back into AI names and AI stocks, which is fantastic because we have a lot of those in our AI portfolio, obviously. But, just positive news all around. It's being driven by deals. It's not being driven. Yes, you have momentum. Yes, you're seeing this off their lows, but it's not just this market thing, right? You're looking at retail that's going to come back because a lot of these companies removed their guidance. And just with the China announcement alone, I wanted to bring up this chart. If you're watching on YouTube, it's definitely worth it. So this is the S&P 500 members with more than 15% sales exposure to China. These are names that have gotten annihilated. Las Vegas Sands is on this list, which has the total year-to-date return. They were down 16%. They're probably better now over the past couple of days. So this is from yesterday, I think, before today. But 63% of sales are China, wind 52%. You have MGM Resorts 24%. Okay, the casinos. But then you have Albemarle, which is down almost 30%, right? And they have 36% sales to China. You're looking who else is on this list. These are all huge, where you have Nike, of course, 15%, Lululemon, 15%. A lot of these names have gotten hit. Tesla, right, who was in Saudi Arabia with the president, down 21%, Expeditors 22%. So I'm providing this list for you because a lot of these names, it puts them all in play that you're going to see this trade, this catch-up trade among these companies. Agilent's on here, Avery Dennison's on here, Aptiv is on here, Expeditors on here, Estee Lauder's on here, as 26% sales in China for Estee Lauder. Again, that stock was down 12%. The point is, there's a lot of areas that have gotten crushed where now you're removing this overhang and it's, back to business as usual. And could that result in China saying, hey, again, this is 90 days, it could reverse? Yes, possibly. But if China actually says, hey, we're not going to do this, we're not going to follow through, again, you've seen what happened to their economy. They're back. They're getting more money poured into their economy than ever right now. Not than ever, but a ton compared to a couple months ago. So it's going to hurt them tremendously to try to play hardball when they're telling everyone they feel like they won in the trade deals, which is good and that's important. Because they feel like they won. The U.S. feels like they won. Why do they both feel like they won? This is the art of trade is, you have a deal that works for everyone and everyone makes out. And that's what's happening with these deals and everyone's seeing them firsthand. So a lot of these companies are all in play now. I would tell you Nike's in trouble. I would tell you Starbucks is in trouble. Now a lot of these things are going to be worth a lot more. The stock's probably going to gain back 20-25% that it's lost and still be down a lot over this past year because a lot of these names have gotten hit. But it's just open up the door to the AI trade, the retail trade, a lot of things that got hurt tremendously, the cyclical trade, the industrials. A lot of these stocks are going to be buys now, and you're seeing the adjustments in the analysts, Goldman Sachs, Morgan Stanley, JP Morgan as well. You need to own one of the top 4 banks, guys. You need to own one of the top 4 banks. I mean, what's going to happen with the economies around the world? We've been telling you to own a top 4 bank for a while. The fact that they're going to have this deregulation of having to have this capital on their books, which they can't do anything with. Now it's going to be lower. You're going to see deregulation coming, not to the point that they can go nuts, and hopefully they monitor. We're not going to have another credit crisis where they leverage that shit out of subprime and nobody knows about it and no one went to jail, which 70% of the people at these banks deserve to go to jail. But just it's going to open up this wave. Not even that for finance companies, for investment banking companies. I mean, that's where you're going to see, profits explode, especially for the banking companies. I mean, they're going to be buying back a ton of their stock. They're going to increase their dividends, and now they're going to be lending out more money than ever to qualified clients that they had to keep because of the current laws, the Dodd-Frank laws in place of those capital ratios being really high. It's going to open the door mid-cap banks, even regional banks. I mean, everything's on the table now, and you can see why everyone's raising their estimates. And we're not sounding like super bullish and you're crazy. We're just coming off very significant lows off of something that was self-made or temporary, like we told you. Now it's reversed. You're going to see this catch-up trade, and a lot of these things start trading a lot higher. And a lot of them, by next quarter, reinstating their guidance. Now there's going to be clarity. Now we know what to do. Now we know what the rules in place are, and that's what you're going to see where you have that transparency. Now companies and analysts could analyze these companies, provide discounted cash flow models with target prices, which they can't do if companies are removing guidance. So it's pretty exciting. It's nice to see the stock market come back, but you also have to be particular on what stocks you're recommending. They're not all the same. It's not buy everything. You're still going to have companies that have problems. But right now, there's a lot of companies that didn't have any problems. They were down 20-30% that are really starting to catch up. And a lot of those names happen to be in our portfolio, which is really great news.
Sticking with, for another moment here, with the chip trade and AI and stuff. Today, this afternoon, Frank, CoreWeave, big data center play, NVIDIA chip play, they report earnings. According to Capital IQ, they are expected to report a loss of 12 cents a share. That is EPS adjusted. If you look at GAAP, generally accepted accounting principles, it's going to be a 22-cent loss. Frank, I think that this stock is a great momentum trade. I think it's great to see the price action and what's happening. It, along with the rest of the market, sold off. It has come back tremendously over the last couple of weeks. You can pull that up if you choose. How I would look at this, if I had a gun to my head, I wouldn't think it soars from here just because of the same pattern that Palantir and Uber and things have taken into earnings. I could be wrong. I want your opinion after I say this, Frank. What I think is great is that this could be a good momentum gauge for the market and the excitement around the NVIDIA and the new deals. And obviously, it remains the clear leader in all thing, or king of AI. My big hang up here is this is a management investment, in my opinion, meaning you are buying into the idea that management knows what they're doing and they can control the balance sheet because debt is exploding. And according to Capital IQ, these guys aren't anywhere near to be profitable looking out until at least after the second quarter of 2026. I'm not saying just because they don't make a profit doesn't mean they can't go higher. We understand that. I'm simply giving you my opinion. Frank, leading into the Q1 earnings, what say you?
I think it's going to go higher only because, and this is a stock that's up 70% in the past month. Okay, and new highs. And I think it's going to go higher because the outlook for this company, and I can't tell you how important that is because I saw another guy just post something on Tesla saying the intrinsic value. I asked Grok and on X to know what the intrinsic value was and whatever, it's trading at 300 and something. And I responded to the guy on Twitter and at Frank Curzio, if you guys want to follow. Again, I'm very appreciative of the following. We've more than doubled, almost tripled the amount of followers in the past 2 months, which is really cool. But I just responded and said, why do people continue to use a metric that has never worked? Because even if you ask Rock to do that when the stock was at 20, 40, 50, 90, 150, you would have avoided the stock. You wouldn't have made money. Instead of using a metric that doesn't work, why don't you figure out what works? And what works with Tesla is the future. People, they have, robotaxis. You have robots coming out. It was EVs. And now, it's a big player in EVs, obviously, one of the biggest, definitely in the U.S. So the future is so important, and it's why you see momentum in Disney, because they finally came out and said, hey, I know it's 10 years from now until we open up another park, but we'll open up another park. We're the best at doing it. Maybe they announce another 5 or 10 of those announcements because now you're looking at the future, and that's what people want to see. That's what a growth company is all about if you want a growth multiple. CoreWeave now with all, if you're looking at NVIDIA making the rounds, doing the road shows, going to Saudi Arabia, signing deals, all this stuff. You look at AMD doing the same thing, Supermicro. Now you have all this demand, and now they get on a call and say, okay, maybe our earnings aren't as good as everyone expected, but you know what? The future, these companies aren't going to stop spending, and we're going to benefit tremendously from this. And I think that's what's going to drive the stock higher because it's what they're going to say about the future. Because now, in a matter of 2-3 weeks, the future has totally changed compared to what it was 3 weeks ago, saying, holy shit, are they cutting back at AI? There's no evidence that anyone was cutting back at AI. We didn't see from any of the major players. We highlighted that. We talked about that, even though people were like, they're cutting back. They weren't. They all reported, right, the hyperscalers. And not one of them said, hey, you know what? We are cutting back significantly from our AI investments. So, they're all spending more. And I think Amazon's going to spend $100 billion by itself over the next year and a half, which is insane. So, I think CoreWeave with this spending, they're going to be a huge beneficiary. And I think any pullback on that is going to be a buying opportunity. And I think you're going to see the stock go to $100 because it's one of the few pure plays, right? NVIDIA's a pure play. AMD's not a pure play, not even close. The hyperscalers aren't pure plays on AI. This is a pure play. This is a pure play on AI, kind of like Supermicro. This is a pure play. Pure play on AI, signing deals with other countries, more announcements are coming. You took recession off the table, so you're going to see CapEx spending intact. I just think this is a name that's going to go significantly higher. I'm hoping it does come down. If it does, I'd probably look to buy it personally.
Quickly, you mentioned AMD. They're in the news for adding either 4 or 6 billion to their buyback. They either added 4 in addition to 6 or vice versa. The point is, it's about a $10 billion buyback, and that's about 5% of the overall market cap, if my memory serves me correct. That is a big move, people. They wouldn't do that if they didn't think it was positive for the overall environment, in my opinion. I wanted to ask you about that, and it was good timing when you brought that up. So AMD, big time on the buyback.
AMD, great time on the buyback. And you're announcing the buyback not in the middle of nowhere where you just signed a deal with Saudis, right? So great job, AMD, right? I mean, they've been really trying to do everything they possibly can to push into AI, and they just have other sections of whether it's, computers and PCs and the shit that sucks for them that's down tremendously, right? They're just trying to transition, just like IBM took 12 years of transition, say with AMD. I could tell you something about AMD. AMD's 120 right now. It's up about 35% of the past month compared to 8% for the, you get Dow Jones there right now, but it's 118. Do you know what the high was on AMD, the 52-week high?
No.
187.
Ooh. It's got some room to run if you're looking at that.
So if these guys happen to get it right, you could see this. They haven't gotten it right, and their estimates, they haven't reported good quarters. You haven't seen this strong growth, and they're saying, yes, we're seeing huge demand but within AI, but they're still seeing like, what is it, 30, 40%. It was like 60%. Now it's like 50%, 45%. Their revenue comes from other divisions that are not doing that well. So, what AMD is at the best play here, I mean, it could have the most upside, but I do like the buyback, which is nice. I wish they would have announced it when the stock was at 70 and not at 120. I don't want them buying their stock at this level because, even at this level, when I look at where it's trading, it is trading at 30 times forward earnings, which is an expensive multiple for AMD since they're not really growing that fast. The AI division is growing fast, but overall they're not growing that fast. So, will AMD go higher? Yes, AMD will go a lot higher than NVIDIA here if this trend continues. So you always want to buy, I'm not saying they're a shitty company. They're not the best company, but you want to buy the shittiest companies in a bull market. They're going to go up the most, just like the shittiest companies are going to go down the most in a bear market, which happened to AMD. Sold off a lot more than a lot of the other names in AI and chip makers. But now you could see this thing pop. I think it's going to go higher from here, but I don't know if it's my best pick because just when it comes to earnings, they just don't deliver. And they haven't delivered. I'd like to see them deliver on earnings. Maybe it goes to 125, 130. It still hasn't gone to one, the high is 180, but I'd like to see that confirmation because if they report another bad quarter, this thing could fall 15, 20% very easily. And people might be like, that's 3 quarters in a row. That's three, like NVIDIA's been putting up the numbers and the stock's been getting hit. AMD has not been putting up the numbers and they've been getting hit. They need to put up the numbers and really show, growth in AI is overtaking, everything else and all the negatives of the companies and really transition to a pure AI company. When they do, that's when this thing can go a lot more higher than it is now.
I just like the buyback.
The buyback's nice. The buyback's nice.
You want to talk crypto or you got anything else?
Let's go Boeing, right? So Boeing backlog, their backlog is so freaking massive, right? And it's always been massive, but they had so many freaking problems. But, this Middle East deal with Qatar Airlines, I just ordered 160 Boeing jets worth more than $200 billion. And this comes on top of what? The trade deal with China. China said, okay, we're ordering 10 777s, and now we'll take delivery of another 200 737 Maxes or something like that. I think it's less than that, but they're placing the big order with 737 Max. All these deals did not exist, and Boeing was moving up, right? Because a lot of negatives have been removed. And when I look at Boeing and saying the sky's the limit for this company, remember, they have this massive moat next to Airbus, where nobody else produces planes other than those two. And now you're seeing massive demand because fleets are incredibly old. This has been the story for a while, but we saw all the shittiness. They got rid of that, the CEO. But look at where the costs are. They've cut costs dramatically. And I always say this about stocks, and this is why I like this as the best Dow component. Might be the best S&P. Yeah, it's going to go up tremendously from here. When you see a company, right, go through all this shit, what do? They cut costs tremendously. But the key is buying these stocks when you're seeing revenue come back. Because when revenue comes back, and now you're seeing this filter down to earnings. And you saw that. We got confirmation because they said cash flow is much better than expected. We're going to be cash flow positive. We're seeing, less losses than we've seen. Now they're turning the corner, and those earnings are going to explode. It's not just the revenue and the orders. It's the lower costs. And when you combine those two, and you see that a lot with companies where they transition or they go through this period of slow growth and they have to cut costs tremendously, when the growth comes back, they're so lean. Those profits absolutely explode. You're going to see this for Boeing going forward. All positives across the board. You want to look at technicals, you want to look at momentum, you want to look at the fundamentals and how this is driven. Everything lines up for Boeing right now. I think it's going to go a lot higher as long as they don't, they have a problem sticking their foot in their mouth or just, something happening with their plane or whatever.
Doors fall off the plane.
Yeah, it's just, the tail falls off and they're like, sorry. So, as long as they don't have any of those things and hopefully lots, just in terms of security, in terms of FAA, and just going through entire facilities for Boeing, which I visited personally in Everett, Washington, which is an incredible trip. You just take kids there. It's an assembly line of planes and jets. It's unbelievable to see how many part makers and how they do it. It's fantastic. The biggest facility is bigger than Disney World, bigger than Singapore. That's how big this facility is. It's massive. But I think that the sky's the limit for Boeing. I think it's going to go a lot higher here. I think next stop's 250. I think you'll see that within 3-4 months because they're just going to continue to announce more deals, get those deliveries. I understand the deliveries take a couple of years, but just to see those orders again. Stocks trade on growth going on in the future. How much growth are we going to see in the future? And they have a massive runway of growth for many years, and they keep signing more and more orders, which is great for Boeing.
Quickly on BA, we've talked about this in the past. I do think there is some value here to repeat it. If you buy into the concept of the administration wanting to balance trade, there's no easier low-hanging fruit than for companies like Boeing and GE Vernova, which is a big fan favorite here. GEV is the ticker. The point there is it's very easy to order a lot of planes, help balance trade with the U.S. if you're a foreign country. No problem, Frank. It's easy to order a nice plane. It's also easy to order a natural gas turbine from GEV. So something there. Think in terms of who are some of the biggest manufacturers in the U.S. Trump is definitely in their ear. They want to manufacture more here, but I do think there's leverage on big manufacturers, U.S. companies, to help with the trade deal. So keep your eye on Boeing. I think that's smart. And then GEV as well. Probably even Honeywell. It's not a coincidence that those companies are all over in Saudi or were with the investment forum. So good call on Boeing there, Frank.
No, thanks. And then you have crypto, right? Coinbase now in the S&P 500. Galaxy Digital about to list on the NASDAQ. We've been all over this. Stock's up huge across several of our portfolios. eToro, you talked about that. I just saw it pop along the headlines. IPO just opened up. It's up 40%.
eToro starts trade today. This is just another kind of gauge of momentum. This is an Israeli company. 25% of their earnings, Frank, if headlines are correct, comes from crypto trading. This is a Robinhood competitor. Think your social media type online brokerage forum. I don't have a lot of specifics on them other than, Frank, these guys tried to go public via SPAC a couple years ago. I know that you're a fan of SPACs, so I don't know if you'd like that. But no, I think this is just great for the overall space. Again, Frank talked about Coinbase getting in. Quickly, Frank talked about us taking a victory lap and patting ourselves on the back as we should. We made some recommendations, did take some pain. I have, however, a buffet of humble pie, Frank. Coinbase. I had Coinbase in our trading portfolio for Dollar Stock Club. Didn't react as I thought it would after earnings, so I sold it for a 1% loss. And then, Frank, they got included. The news broke. They're going to go into the S&P 500. And guess what happened after I sent out the email to tell of all of our subscribers to sell for a 1% loss? It rallied 2% on Monday following the U.S. China trade deal headlines. And then yesterday it rallied 22 Florida % to show Daniel Creech that investing is like golf, and I will continue to be humble. So I apologize for that one. In addition to them being included in the S&P 500, that's awesome news for crypto in general. Frank, did you happen to see CEO Brian Armstrong of Coinbase on CNBC this morning?
I didn't see it yet. No, I'm going to see it. So I did get it. I'm looking forward to seeing it. So.
I have been in the camp that we need legislation to really help Bitcoin go to a new all-time high. And I don't mean a new all-time high. If the old all-time high was 109, Frank, I'm not talking 112, 115. I'm talking like 125, 150, something like that in Bitcoin terms. I personally think we need some legislation. We need more concrete evidence to help catapult that catalyst. I could be wrong. I'm simply saying that's what I'm looking for in a big way. The stablecoin bill failed last week. And I'm telling you all that because Brian Armstrong was quickly on CNBC this morning, and he was nonchalant about it. He said, listen, and I'm not saying he was making any threats, of course. I'm simply cutting to brass tacks here. He was so cool and collected, and that's pretty easy for him. The guy looks like a robot. My point is he looks very calculated. And he said, yeah, listen, the stablecoin bill failed. I have no doubts that it's going to get passed. He said, crypto's got a lot of momentum. Look at what's going on. Look at how big of a player it was in this election. Talking about crypto is maturing because it's playing the game in donations and all that kind of stuff. And he was so nonchalant, Frank, that this bill was going to get passed by the end of the week. Now, I'm not saying that compromise can't be made. I think that would be amazing. I was surprised in his calmness on how he thought this stablecoin bill was just going to go through. Yeah, it took a step back, but it's fine. We'll see how that plays out. But kudos to Coinbase. I'm sorry. I got that one dead wrong. It's embarrassing. We can have fun with that. Included into the S&P 500 is huge. This eToro thing, I think, is huge, Frank. It's great to see momentum up here and Bitcoin rallying to what I think will be new significant all-time highs.
Yeah, it's still holding 100,000, even though gold has pulled back, right? Gold's like the safe haven, and now it's like, hey, it's risk on, right? So gold's pulling back a little bit, still doing great. When I look at crypto and Coinbase, look, the reason why Coinbase went up so much, it opened up like up 10% and opened up like 240, and it went to 260 throughout the day. Why? Because there's a lot of people, I believe, that was short that stock. There was a lot of downgrades going in. We mentioned that last week, going into the quarter, and it's very difficult to predict. It's not that difficult. It's kind of easy because I've been doing it for a long time with the Russell 2000. You know pretty much what stocks are going to get to Russell 2000 because they rebalance once a year. You can go to the S&P 500 whenever, and there's a bunch of market caps that, that could make it. And Coinbase was on, and there's probably a list of like 20, 25 companies that could probably make it, but you need someone to get knocked out. How they get knocked out? Well, most of the time is through an acquisition and one of these companies get acquired. Now you need someone else, and Coinbase was the one that was on slate, which is huge. That's a very big announcement, very big for crypto. It's a milestone for crypto and a company getting to S&P 500 like that. Just to see like the negatives, and I understand the negatives because as crypto gets bigger, it's not necessarily going to be the greatest thing for Coinbase because their fees are very, very high. And you're looking at Robinhood's fees are much, much lower. You're looking at, that where you could buy crypto. Their fees are very high. And yes, they have institutional support, but then, you bring the Galaxies in and stuff like that. Again, Galaxy's going to be on the NASDAQ, I think by the end of this week, right, Daniel?
Friday.
Yeah, so Friday they're expecting that. Good, congratulations to them. It was very difficult. They should have been on it 2 years ago. The previous administration said, we don't care what you do. We don't care who you are. I know you're a donor Democratic Party. F you're not coming on. You're not going to get the NASDAQ listing for some reason. And now they're going to get the NASDAQ listing. And I think that's going to have a $10 billion market cap from wherever it is. I don't even know. It's $2.5 billion, $3 billion now. It was $1.5 billion when we started putting in portfolios, basically. But Coinbase is going to have that risk. And that's what a lot of these reports talked about. But getting into S&P 500, I think, that 20% move higher, the last 10% move higher, I think a lot of people are caught off sides with that one. But, the tailwinds behind crypto is still massive. They're not changing. You're just seeing this massive worldwide adoption. Now, just like we have certainty, more certainty with trade deals, we're gonna have certainty. Now we have a SEC commissioner who's just elected, finally. And now we have more of a level playing field where we're going to have regulations that people could look at, that institutions could look at and say, okay, I know the game. Now here's the rules of the game and here's how I can invest, where you couldn't do that a year and a half ago, 2 years ago. You couldn't invest in it because it was all over the place. And that's why tokenization is huge. If you look at all the news coming out from T0, the platform we trade on, right? One of the first companies in the world to tokenize our business, right? Like a long time ago. Now, we're seeing momentum in tokenization, and Larry Fink says that's the next big thing next to ETFs, which is huge. And he dominated ETFs. And how much under management they have? 13 trillion now, whatever it is. Probably went up $1 trillion in the past couple of weeks.
Trillion more than last month.
Since they own every stock on the planet, they had a position in every single stock almost. But anyway, getting back to the S&P 500 really quick, it's nice that Coinbase got in it. It's not that easy to gauge that. It's much more easy to gauge the Russell 2000 because they rebalance every year. It's based on market cap and price, and you could see the list of companies that are probably going to enter and a list of companies that are going to probably get, thrown out of the 2000, or ones that are going to graduate to the mid caps that come out of the 2000. So, this was a surprise. It's a good catalyst. That's great. And like you said, eToro I think they just came out.
Headlines are saying it was priced in the 50s and opened up in the high 60s.
Yeah, it's 68 right now. It's up 31%.
Nice.
Okay. It was as high as 74. So yeah, it opened up. It opened up probably like an hour and a half ago. So it's up 31% right now. So, great stuff, right? That's when you have momentum, and you see momentum, you see more risk. The VIX has come down as well. But again, it doesn't mean everything's going to go up. You have to be careful here. But these are just some of the things that are working right now. And, within crypto, look at the deals Saudi Aramco is signed with. Again, I have Honeywell and Exxon so far. I have to look. That news came on. It was announced as soon as we came on. So I want to see more details on that. But just positive news all around where you're removing this risk. You're removing the uncertainty, and markets hate uncertainty. I always say it's the death of stocks. Now you have certainty, and also with a catalyst going forward, deregulation, but also a playbook that now China's market has gone higher. Saudi Arabia, Qatar, everyone that's signing deals. So what's Europe going to do? Europe's sitting there going, okay, maybe we should sign Canada. Maybe we should sign a deal. It's going to be great for our economy. Let's see if we could come to terms with a deal that makes a lot of sense. Because now, what do you have? Look at all the grandstanding. Look at all, they roll out the red carpet in Saudi Arabia. Look how beautiful it is, right? All the people there, and they're all like high-fiving each other. And you guys are great. And, Trump's calling Mohammed by his first name. He's like, oh, I don't know how you sleep and turn. And it's all fun and games, and it's great when everything works out. You see deals like this for both parties. That's what you want to see, especially as an investor. Again, you can put your politics aside. This is about stock investing. And right now, we're doing really well. Hopefully you guys are doing well if you listen to us, because it wasn't that well for a couple months there with the tariff uncertainty. Now you're removing that. You're removing the recession risk as well. And it's just really good for stocks across many sectors. And that's what we're seeing. It just opens up lots of ideas to us, and lots of ideas that we shared already with you guys. So I'm going to share a lot of those tomorrow as well in our premium podcast. But lots of good stuff going on right now.
Again, the administration is going to be very positive. Secretary of Treasury Bessent is talking about how he continues to be surprised on the tax bill and the progress they're making. Frank, just to put a checkpoint and a deadline out there, this seems to be very optimistic, but what's going to move stocks? We're through earnings season, so we want to look at that. More deals. Secretary Commerce Howard Lutnick says dozens of deals could be coming over the next months. We'll see how that plays out. But on this tax bill, a lot's going to be kicked around. It passed one vote today on just getting marked up or marked down or whatever them people that don't work near as hard as they should for you complain. And that's whenever you hear somebody telling you how hard they work for you, as politicians do, don't believe them fully on that. But there are rumors that say, hey, this tax bill is going to be done, Frank, by August recess. Some are pulling it up, even saying next month or the next 2 months. I think that's very optimistic, but again, that is going to move stocks. That is a huge catalyst because of the taxes, the deregulation, all that. It's still clear as mud from this standpoint. Again, we're not just being cheerleaders. Tomorrow, I'll talk a little bit more about one other red flag to watch. That's the 10-year. Nothing new there, but just keep your eye on it. It's not all systems clear, but it is a hell of a lot better clear than what it was just a few weeks ago. So stay fluid there, people. Follow the data.
Yeah, and tomorrow we got CoreWeave reporting, Alibaba's reporting. This is a stock that was like 105 a month ago. It's 133. Again, the outlook's going to be very favorable for them if they report. Again, cloud has been on fire for these guys, and people have been avoiding it. It's 52-week high if you look at it. It's 148 to 133, but when you look back at 2021, 2020, this is a $300 stock. All right, so you could see if things really go well with China. We all know the risks. Everyone knows the risks involved. We understand the real estate risk. We understand what's going on with their economy. But now if you sign a deal with the U.S., getting that revenue play, and now you have double bazookas. They were happy with just one bazooka. They announced another freaking massive stimulus plan just recently, right? So with all these stimulus plans coming in, let's see if they actually work, because right now when you have a deflationary environment, they haven't worked too much. But again, when you sign a deal with the U.S., there's a lot more stuff going on under the hood than they just reporting. And this could be really positive. And let's see what Alibaba says. And it's a company that's ran up a lot over the past week, especially over the past month. Let's see if they could really follow through with really good earnings, and we'll see. So 2 companies reporting tomorrow should be very interesting. We're going to take a look at, and we'll definitely cover them in our premium podcast. You can find out more about premium. It's $10 a month that we charge for that, where we also include a trading portfolio. That's a lot of fun, that podcast. So we really get into more details, more ideas. And again, it's $10 a month, which is like nothing to charge for that. So, which is pretty cool. If you're interested, you can go to CurzioResearch.com, learn more about it. But it's a really good podcast, and the value of it is incredible. And if you've never had someone subscribe to it and say, oh, this is a piece of shit, they love it. You know, it's really good. You're getting information that you're not really getting out there, more detail, more ideas and stuff like that. So we're going to cover these 2 names more in depth than what we're going to do. Maybe we'll recommend one of them in the trading portfolio, depending on what we see tomorrow when they report earnings. So